Yeah, morning traders. So we've got growth as dominant thematic now. It has wrestled control from the focal point of inflation. The manufacturing number, the ISM manufacturing number on Friday, obviously sorting that thematic out there in the eyes that we've seen the headline number coming down to 53, but it was the new orders subcomponent that's moved into contraction, making us believe that the headline number could come under pressure and go into contraction at some stage. The employment subcomponent also quite weak. Now we will look at the inventory number that came out, and that did rise, which you could say is a perception of falling demand. But at the same time, if you look at what we've seen from supply delivery times, where that's fallen from 65.7 down to 57.3, you could argue that supply chains are unclogging, they're working themselves out, and that probably is a positive for risk going forward. We have seen the Atlanta Fed model for GDP for Q2 going to negative 2.1. That's getting a bit of focal point in the ideas that we could see a technical recession, certainly on a real basis. And we've seen a massive rally coming through in treasuries. Going to 5-year treasuries, we saw that down 16 basis points at 287. At one stage, we were down at 277 on the yield there, and that was one of the biggest rallies we've seen for many, many years indeed. 2.5 curves at 4 basis points, looking like that might invert for the first time since February 2020. And we're watching what's happening in the rates market. It's telling us a pretty clear message. I've been talking about this for a number of days now. Euro-dollar futures in that time spread between December 22, 23 now, pricing an additional 20 basis points of cuts for next year. That's telling us a pretty clear message, which I've been writing about. S&P futures had a really strong rally going into the back end of this session. Certainly you've seen 1.75 million contracts traded going to the cash market. 86% of stocks were higher in the S&P. So that should really give us a nice platform to develop in Asia on the open here. Now that move we've seen on rates, both on a nominal basis and a real basis, has validated the stance from the Bank of Japan. The yen is the momentum play as we go into the new week there. Certainly Aussie yen, Noki yen under big pressure. We're watching copper very closely there as well. Now what are we watching for the week ahead? Well, we've got the RBA meeting. They should raise rates by 50 basis points. That's the wide consensus trade. We've got the ISM services number through the week. We've got the FOMC minutes. Not sure we're going to learn too much from that. We've got some ECB speakers, and we've got payrolls on Friday. I think that's going to be the big one there that everyone's going to be focused on. So a big week ahead. Trade it with Pepperstone.